Hello, welcome back everyone to Lamb's Cryptoverse. So today I'm going to start something new and I got some announcements. Number one, Waleed, he's my co-podcaster. He cannot make it today. He's got an important meeting. Yes, I know, more important than hanging out with me and you. Just kidding. So that's the first announcement. The second one is I'm trying something new in terms of recording. I'm using Zoom instead of another app that I have to record, and I'm going to try and share my slides. Maybe I'll have be on one side and then the slide will be on another side. So I've got a lot to discuss. So what we usually do in the podcast, in case you don't remember, we talk about what's the vibe check, what's the macro, what's going on with Bitcoin and crypto, what's going on with individual projects, and then we focus on one project. I think because Waleed's not here, I'm not going to focus on one project. We're going to talk about Solana, but maybe I'll just touch on that if I have time. But there's a lot to talk about in the news. So let me try, like I said earlier, let me try and share my screen and talk to you about what's going on today. So here goes. Okay, hopefully you can see this. I'm sharing my screen. Oh, not yet. Now I'm sharing my screen. And this is Fed video unavailable. I don't know why it said that. But the point is, this is a video. Originally, it was a video showing a lot. Well, it's not live anymore. What's going on with the FOMC meeting? Jay Powell, he and FOMC met today to talk about interest rates. And what he did was, maybe I'll show you another slide, is he kept rates. Here you go. He kept rates at the same 4.25, 4.5%. This is the fourth straight time he's done this. Now, historically, what usually happens is rates go up, and sometimes they go up quickly, and then there's a recession, and then they go down really fast. That's what happened the last few times. It happened in 2008, 2020, and it happened in 2001. It ain't happening this time. The Fed raised rates, one of the most rapidly that they've ever raised rates, but then they held them. So they have come down a little bit and then they've held them. So they've been really worried about a few things. One is, I think you know this already, the trade tariffs. But now, more recently, as of this week, it's what's called geopolitical. So we had geopolitical risk with Ukraine versus Russia, right? That keeps inflation high. Well, there was a worry of that, but now there's a new news of Iran versus Israel, and that's keeping oil prices high. And that's a known, right? We know about that, but there could be other unforeseen inflationary risks. So because of that, the Federal Reserve and Jay Powell decide to keep rates flat, not lowering rates, despite what Donald Trump says. I'm not sure if I should repeat this. These are very bad words. He wants Jay Powell fired, and he's calling Powell stupid, and I don't think that's right. I think he's a smart guy. Do I agree with him? I historically have disagreed with him. I thought he raised rates too late. Remember, he said he was not even thinking of raising rates. Now I think he's doing a better job. I think rates should not come down fast because if he's going to lower inflation and if he's worried about tariffs and geopolitical risk, he does need to be more hawkish and keep rates high. So let me go on because there's a lot to talk to you about. So let me get back to my slides here. So what I want to talk to you about was the vibe check. The vibe check is that I think we're getting more liquidity, better vibe in terms of ICOs and IPOs. So an ICO, if you recall, is a crypto project ICO, and an IPO is initial public offering for an equity. And what you see here on this chart is GDP now is forecasting much stronger GDP growth. I don't think this is going to happen because the GDP now numbers are being influenced by the trade data. Remember, there was a pull forward with trade because our trade partners were worried about upcoming tariffs. So that's the second thing I want to talk to you about. And going back, let's just step back. I want to talk to you about ICOs. We have a big one. Plasma Foundation had an ICO. It's a layer one purpose-built chain, just like Hyperliquid. And that's, again, another purpose-built chain. I'm shocked that there are these purpose-built chains because I thought these chains were going to be part of a layer zero like Polkadot or Avalanche, or part of layer one, maybe a layer two chain on Ethereum, for example. But they're not. They're just separate chains. They're not layer one. They're not part of layer zero, and they're not part of a layer two chains. They're their own purpose-built chain. There's also a real-world asset, RWA chain, that's purpose built. So I'm very shocked about this. I really thought with all the layer ones and the layer zero chains out there that there would not be any separate layer ones like Plasma and Hyperliquid. And again, again, I should say IPOs are very popular, and Circle Financial like popped whatever it was, 100%, and it's been going up almost every day. And you saw the news. Not only that Circle Financial is doing well on its IPO, but Coinbase today said that they're going to be doing stablecoin payments using USDC on the Base network. Remember, Base is a layer two that's formed or owned by Coinbase. So Base is a private blockchain, Ethereum compatible, layer two. Let's see if I covered everything. Okay, macro. Continuing with the vibe. Vibe is increasing. It's getting better because the liquidity is rising. M2 money supply just went over 8%. So we're close to that tipping point where it's going to be high enough. It's going to be growing rapid enough to affect the altcoin market in a positive way. So let's take a look at some charts here. This is M2 growth. And you can see here, it's over 8% now. So my theory is that once we surpass 8, I don't know where it is, like if it's 8% or it's 8.5%, but once we surpass at least 8%, going towards 10% on global M2 money growth, that's going to be the tipping point that pushes altcoin prices way up. They're going to rocket, like Ethereum and Solana and you name it. And you're going to see here, Bitcoin dominance, which is very high now. It's at 64%. You're going to see Bitcoin dominance starting to decline again once M2 starts skyrocketing. I'm not sure. I don't think we're there yet, but we're very, very close. Let me go over my data. Some bad news on macro. I mentioned again, geopolitical risk, Ukraine, Russia risk, the Israeli risk is in flux. We don't know what's happening there, and that changes by the day. I'm not going to talk to you about the details, again, because it changes by the day. BOJ, Bank of Japan news was slightly dovish. They're going to be changing the quantitative tightening. Now, if you recall, Japan was finally raising rates and being hawkish and using QT. But because of that, 30, 40-year, I think they have 40-year interest rates, 40-year bonds, they skyrocketed to all-time highs. And the Fed and the G7 central bankers are worried that there's going to be a risk off if if the Japanese keep raising rates. Because what happens is the carry trade gets reversed. And if the carry trade gets reversed, there's going to be a sucking sound where equities get sold rapidly. We had this a year ago, I think it was, where stocks went down rapidly because the Japanese JGB rates went up and the Japanese yen went up in value, meaning the US dollar was got weaker compared to the Japanese yen. So this is something to watch, and it is one of my top 3 risks. I think this risk is larger than geopolitical risk. What else is there to talk to you? Economically, we've got some weakening and soft economic data, like the Empire State, that's out of New York, manufacturing data. It declined rapidly to minus 16, and retail sales, excluding automobiles and gasoline, was very weak at minus 0.3%. That may not sound a lot to you, but that's a monthly change. So that's a minus 0.3% monthly change. So if you multiply that by whatever, 10, to annualize it, you're talking about a 3% decline in GDP growth. And I talked to you about the FOMC meeting, Federal Open Market Committee meeting. They kept rates flat, which is good for longer term rates. But surprisingly, longer term rates did not decline much today. They declined initially, and then they went back up again. Now, remember, the tighter and more hawkish the Fed is, and when the Fed leaves the Fed funds rate higher for longer, this will keep longer term rates from skyrocketing. And remember, the term premium, meaning longer term rates are higher than short term rates, has been rising. This is not only because the Fed initially lowered rates too rapidly, but the second reason is we don't have central banks and companies and whatever that are able to buy, institutions, even pensions, that are able to sap up and buy our treasuries, because the United States is producing there's too much financing. They're selling too many treasuries. There's not enough buyers to purchase those treasuries. So the term premium is rising for many reasons. Also, there's the issue of whether or not the United States government is losing its sovereign status. If you recall, a few weeks ago, Moody's downgraded the sovereign credit rating of the United States. I think it was to downgrade to AA1, if I recall. I'm sorry, AA minus. So this week in the news, I don't want to talk too much, but we've got not only increases in treasuries, and let me show you that page. Hopefully you could see this. This is the treasuries of Bitcoin, but I really want to talk to you about Ethereum, but let's talk about treasuries for Bitcoin right now. The only thing I want you to notice in this chart is, well, of course, not only that Bitcoin treasuries are going up, but that corporate treasuries, this is not just private companies, but public companies. If you had public companies and private companies, these treasuries are rising at a rapid pace. And then you have not only governments like the US government having Bitcoin as treasuries, but you have state governments like Texas agreeing to have Bitcoin in their balance sheet. But I want to talk to you today was not Bitcoin treasuries, but Ethereum treasuries. We're seeing the beginning now of a sharp increase in treasuries from companies. And the biggest example of this is SharpLink. So SharpLink Gaming, that stock went from $3 to $75 because Joseph Lubin, the former co-founder of Ethereum, he is now running, or he's on the board of directors, I believe, of SharpLink Gaming. But it's not a gaming company anymore. What they're doing is they're doing Ethereum treasury, almost like a micro-strategy of Ethereum. And they went out and bought $425 million in Ethereum. And what else? And another thing I want to talk about, especially for Ethereum, is that Trump's Truth Social is applying to the SEC for a Bitcoin / Ethereum ETF. And remember, the Trump sons are very, Eric and Donald Jr., they're very into Ethereum. They have a large holding of Ethereum on their companies. And it's not just Truth Social. They also have another company. I can't think of the name right now. And I'm not sure if I mentioned this. No, I mentioned to you implicitly that stablecoins are very important, and that yesterday the Senate approved. So it's not approved, it hasn't been signed by Donald Trump, by the president yet, but the Senate has passed the stablecoin bill. And key things of the stablecoin bill is that it's, of course, backed by collateral, meaning the money market or US dollar. It's not backed by a formula. It's not formulaic. like Terra Luna was. Two, there's gonna have federal oversight and regulation, and KYC, and three, and this is one thing I did not like about the stablecoin bill. It prohibits income, interest, dividends, whatever, to holders of the stablecoin. Why? I don't know. I need to look into that, I guess. Let's see if there's any charts I wanted to show you. Oh, I forgot to show you M2 money. I did show you M2. I forgot to show you risk-weighted assets. So risk-weighted assets has been rising rapidly, and this is all part of the stablecoin bill. It's going to be part of the infrastructure bill. There's a whole bunch of bills and committees circling and going around Congress. And whether or not anything gets passed, we're already seeing a huge increase in what's called RWA. I keep calling that risk-weighted assets. It's not. It's called real-world assets. I don't know why they call it that. But what I want to show you is that it's still rising, and it's rising rapidly. And everyone's talking about Avalanche and Solana doing real-world assets. But I want to show you two things. Number one, because we're talking about the stablecoin bill, stablecoin is a huge part of that. Because if you recall, stablecoins are literally just another real world assets. It's tokenizing the dollar basically in money market funds. But I want to talk to you also about Ethereum, because again, I mentioned to you just a minute ago that where is it? Yeah, I have to look. I have to go to the market overview and see the network. I want to talk to you about networks. So here it is. Everyone's again talking to you about Avalanche, but you can see Avalanche is number 9 and Solana is number 2. My main point here, even though everyone's talking about Solana, RWA is going to be, no, mistake. It is on Ethereum, and it's going to stay on Ethereum. You could see that the majority of RWA, especially stablecoins, are on Ethereum. And when I say majority, I don't mean what you see here, 59.69%. I'm not talking about 60%. It is far greater because you have to count EVM. You have to count layer 2s and private layer 2s. So you're talking about, ZK, you're talking about Base, Arbitron. There's a lot. So it's very, very high. You know what? Let's focus, and then we're going to go. Let's focus on stablecoins. So you can see stablecoin is a majority of the USDT that's tethered, but in the future, it's going to be Circle's USDC. And we saw the news on Coinbase that Coinbase is going to be using USDC on its base chain, its base layer 2. And let's see if we have the networks here. Yeah, you could see here Tether, Circle, which is USDC. And let's see. And I want to see if Base is here. It's probably in another, it's in another chart. Yeah, it's in another chart. You don't see it here. But basically, let me hit transfer volume. If maybe we could see it here. Now, you don't see Base here, but my point, maybe it's on the network. Let's see, asset, currency, maybe it's on the currency. Well, Base should show up eventually. So here, this is showing that the US dollar, by the way, people are worried that the US dollar may not be the reserve currency, right? But in an open, unbiased market of blockchain, 99% of some crazy amount of holders, including in Europe and Asia, are choosing the US dollar as their preferred stablecoin. So I wouldn't be too worried about the US dollar status as a reserve currency. So let me stop that. This sharing. Did I stop it? No. I'm not sure if I stopped it. Let's see, share. Well, I don't need to stop it anyway. Well, Thank you everyone for listening. Hopefully next week Waleed gets back and we could talk more. We can talk, there it is. I stopped sharing. We can talk more about what's going on with Solana and Bitcoin. Have a good